Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 10th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got the JOLTS jobs openings released today, and it came in at 5.62 million job openings, which is pretty good. That means that people are starting to look for workers, so that's actually pretty good for the economy. One thing we did get was crude oil inventories expected a drawdown of 1.3 million barrels, came in at another build of 1.1 million barrel. So I keep talking about this, a glut of oil out there. As you can see here, crude oil off the day by over 87 cents, maybe right around 87 cents right now. It was 90 a second ago, but basically really coming off. Now, one thing is the equities were pushing a little bit lower. I think crude oil is going to lead us to the downside here with this sell-off. I think that we talked about this yesterday with the bonds, gold starting to push higher, was a bit of a precursor with the smart money going into safety. And there's times where people, the retail person, has a tendency to really jump on board at the most inopportune time and get out at the most inopportune time. So that seems to be what's kind of culminating here. We've made all-time highs. That makes news headlines. People start jumping on board, and that is probably the time to not do that. It's actually the time to start taking in some option strategies and implementing that into portfolios for hedging purposes. All right, we've got super low volatility right now. We could expect that to start to increase going forward. Anyway, on to, like I've said, crude oil being down on the day, just over 80 cents right now. Gold futures pushing higher up 4 cents. You can see it's a bit off of its highs as the stock market started doing a bit of a turnaround. Some money started flowing out of there. As you can see here, bonds again up 19 ticks on the day, pushing higher as there's a bit of flight to safety there. On to the NASDAQ /NQ, down 9.5 points right now, again off of the lows that we saw earlier this morning. Right off the bat, the market really started sliding as we opened. Then on to the E-mini S&Ps /ES, down almost 4 points on the day, but again off of its lows. But it just seems to be like we're really losing steam. You can really see the volume start to slowly trickle away, and that is not a good sign for the bulls. Then this is what I was talking about with a bit of catching a bit of a bid. That's where we've starting to see a little bit of this, some of the intraday shorts starting to cover, getting a bit of a bounce here. We'll have to see whether or not it's like a dead cat bounce is what we used to call it on the floor, where the market slams down, you get a dead cat bounce, and then resume the negative to the downside on that. You can see that this has created quite a support resistance level right in this area, and that's kind of what we're up against, that being resistance to the upside right now. Then on to a couple things that I've done. This is the YELP trade that I did, and this one got out by the skin of my teeth. YELP came in with better than expected earnings. They were actually expected to lose money, came in a bit profitable, which has kind of been along their mantra, is that the estimated earnings are always negative for this company, but they seem to make money, and that is usually the surprise to the upside. We got that again today. I was a little bit nervous about this strategy, and after they came out with their earnings last night, became increasingly more nervous. So I got out of this as fast as I could, luckily. And I had on the August weeklies, sold the 28.5 puts with the 37 calls to create that strangle, followed my rules on the earnings webinar that I talked about, and got out before it went into those 37 calls, went into the money, which was right off the bat. Again, in the first probably 5 minutes of trade is when I got out of this strategy. Originally sold it for $1.10 yesterday, right before the close. Bought it back for 65 cents this morning on the open. Again, YELP not having a whole lot of participation early in the morning, but I think a lot of people jumped in there early, which gave me that opportunity to get out relatively quickly. I was worried that I was going to have to wait a little bit for participation to kind of come into that market. Now, Southwest Airlines, this was a trade that I put on for the webinar on Christmas trees. And I did the August 35, 36, 38 put Christmas tree in there. And I originally paid 35 cents for it, was able to get out of it for 70 cents. So I doubled my money on that debit, which is the profit target for something like this. These Christmas trees are kind of like the butterflies, the webinar that we're doing right now. We did the Christmas trees before we started this one, and it's in that same family. And it takes a little bit longer for these strategies to really work themselves out and become profitable, as did this one. But doubling my money on that one that I paid for it was really the time to get out. I don't want to really go any much further. Plus we have ex-dividends coming up, and I didn't want that to throw a wrench in all of that. So got out of that one. That was a good trade. Friday's webinar is going to be on the long call butterflies, so staying along this family. So this is going to be something where if this market does continue to trade sideways, it'll be a great strategy for that. Low implied volatility will be pretty good. We can probably pick a mid-range volatility for that one and implement that into our portfolio. All right, so go to protraderstrategies.com, check that out. That's all I got for you guys today, other than if you can't take that, take it easy.